Hi everyone, this is Stephanie Thomas of the Sales Tax Sisters and Thomas PC. We are going to talk about bad debt write-offs today. Cue the music. Hi everyone, this is Stephanie Thomas, and we're going to talk about bad debt write-offs. With each, and it varies from jurisdiction to jurisdiction. Bad debts are very important, and we all know what it is to work for someone and then, surprise, surprise, they don't want to pay you. Well, the big takeaway here is if you have bad debts, the controller's office here in Texas, and I'm sure this is true for other jurisdictions as well, they are not asking you to pay sales tax on a debt that you never collected the money from. But how you substantiate bad debts is very, very important. Here in Texas, if you are an accrual basis taxpayer, and we already had a wonderful video about accrual basis versus cash basis, but a quick rewind here is if you're an accrual basis taxpayer, you're reporting sales tax based on the period in which the sale occurred. So normally, sometimes it happens where you are reporting the sale in the period that the actual transaction occurred and you didn't get paid in that period. So there are some timing differences there, okay? So say you had a transaction that occurred in July, but you didn't get paid for that transaction. You actually are an accrual basis taxpayer, so you reported that item on your July Texas sales and use tax return. And then August rolls around, September rolls around, and you look down and it's November and you haven't gotten paid for that transaction. What do? You already remitted in sales and use tax on that transaction back on your July return. What you do is you write off that bad debt. And the important thing about writing off the bad debt is, in order for you to get credit for that on your sales and use tax returns, if you are ever audited, and that's the big thing, if you are ever audited, then you must also have a trail of you writing that bad debt off on your federal income tax return. So make sure you have a connect the dot trail of, I wrote this transaction off. One, the first thing is I reported this on my July return. Two, I realized I was never going to get paid, so I wrote it off on the return. And three, I wrote it off on my federal return, and here is the proof of what I have written off, and you can see the trail from that transaction to the federal return. We do not want summary numbers, okay? Auditors don't like those. So you want to be able to have the components of that write-off, so in case you're ever audited by the taxing authority, they can say, oh, okay, you wrote off invoice number 345. I see it on your Texas sales and use tax return, and I also see it as a component of the write-off on your federal tax return. And that is for accrual basis taxpayers. For cash basis taxpayers, obviously this does not necessarily apply because you are reporting sales tax when you get paid. So just a little something to think about. I hope you liked the video. If you have any questions, please let us know. We also love comments, and follow us. Thumb us up, and subscribe. I mean, if you haven't subscribed, what are you waiting for? And also, you can follow us on LinkedIn, Twitter, Insta, and Facebook. We have a newsletter coming out. Well, we actually have a newsletter, which is filled with all kinds of goodness that you don't necessarily see on the YouTube station. So you may want to sign up for that as well. And all of the information and links will be in the description box. And I hope to see you again next week. Or it could be Mary. Who knows? Or it could be both of us. Who knows? Bye.